Hey everyone, welcome back to Finance Bro University, brought to you by Mangosteen. Become a dividend king with MISTI. It's just that simple, right? Finance Bro University is the university for the new paradigm in finance. Master the old rules and then break them. The dream of passive income, tenants that never bother you, no matter the economic environment. And we've got these YieldMax products like MISTI or Ulti and YBIT that generate covered call strategies and dividend yields of 70 to 80%. Of course, this just means retirement, right? So the premise of this video will be based off Marcos Miller and Jay Pestricelli interview that they did a couple days ago. Marcos does a great interview with Jay from YieldMax, and this will form the basis of this video. Now, Marcos did a fantastic job of interviewing Jay, and Jay took a really high quality and balanced view of the MISTI and Ulti products, and I really appreciate Jay's interview. But I don't get a feeling that people on the MISTI X subreddit have a true appreciation of some of the technicalities of what Jay's trying to explain to you. So we're going to go into that in a bit of detail. I shared a post on X a couple days ago where we looked at the maths of total return and we did the Ulti ETF product by YieldMax. Now, we can see in the charts that its IPO price was around $20, and we know that it has had about $13 worth of distribution so far, but its current price is trading at around $6.20, which means that we've generated a nearly $14 capital loss for a total return of negative 60 cents. And so with this amazing dividend yield that they're generating, why, when we look at total return, does it look so strong? Well, total return matters. And Jay from YieldMax talks about this in his interview with Marcos, which I'm going to go into in a bit more detail. But we'll explore why MISTI has not experienced this fate just yet as well, and explain why we need to be careful about how we invest in these products. This interview is quite long, and I'm going to post some salient points from this interview and then reply to them with the technical detail that you need to know to understand truly what's going on. With my first three sections dedicated to Jay explaining how the YieldMax MISTI product works.
However, we're not actually long the stock. We actually don't own in MISTI. We don't own MSTR. We use a combo or a synthetic where we are long a call and short a put, collateralized with treasuries.
So what Jay's trying to say is that they're synthetically long MicroStrategy because they're not allowed to legally own the MicroStrategy underlying stock price. And they do that with options. And what they do is they buy two options. They purchase a call option and then they sell a put option. These are the graphs highlighted in yellow. So to detail out graph one, you buy the call, which is where your P&L goes down because you spend money purchasing the call. And then as soon as you start going over your strike price, you make money. Now, when you short a put, you generate income because you sell the call for the option premium. But if it goes below your strike price, you start losing money. Now, if you do that at the same strike price and the same expiry, these options basically cancel each other out into essentially a synthetic futures option where the payout looks something like this on the right, and you just have an exposure to the MicroStrategy price with a P&L that looks like you just own the stock. And so it's like owning the stock. The second and final comment that he makes in this clip is that they collateralize these options with treasuries. And so what they actually fundamentally own is treasuries, and those treasuries are used as collateral to hold a leveraged position on the long call and the short put. And so they use sort of a leveraged exposure. And I imagine they can leverage that up to a certain level mandated by their ETF product.
Then we sell calls and call spreads for that income.
So once they are synthetically long MicroStrategy, they then go and generate income from selling calls and call spreads. And the easiest one to do is just to sell a call and say, hey, I want to collect the option price, the option premium at a certain strike price. And if it goes above that price, it doesn't matter because I'm hedged to the upside through my synthetic long. And so that is the opportunity or the easiest way to generate income through selling calls on top of a long exposure.
Is because we're able to sell calls for an amount of premium, and that's tied to the volatility of the stock. The more volatile a stock, the bigger the premium on calls, and the more you can sell them for.
So what Jay's explaining here is like when you've got more volatility in the price of a stock, this option premium that you then generate to sell your call option is much higher, and you can generate more income. Now, the problem with this is that it represents the higher likelihood of that option expiring out of the money, which means that it represents a much higher likelihood that the option then expires somewhere in here out of the money. The beauty of Jay's strategy, though, is that you don't care about an expiration out of the money because you're long hedged. You're not exposed to this negative downside because you have that synthetic long on the stock. There is one problem with this approach, and that is that this higher option price generated from this higher volatility represents a much higher likelihood that MicroStrategy's price could find itself down in this region, which on the surface looks like you don't care. But let's explore this in a little bit more detail.
Upside movement, any cover call strategy is desired, especially the way we do it at YieldMax with spreads. But more importantly is the worst case scenario, right? And I probably talk more about this than anybody else. You are long the stock. You are long MicroStrategy risk. We talked about you're long Bitcoin risk, right? So you don't want MicroStrategy to go down, right? If you're bearish MicroStrategy, then MISTI is the wrong position for you. You should buy the inverse, which is winter, WNTR, because we do have some inverses, right? When I talk about some of the innovative products out there, having an inverse on MSTY is important, right? Have winter, right? It's the same thing. It's a covered put instead of a covered call. It's bearish with selling puts instead of selling calls. But we don't, I know you don't want to get into that one too much, but I think it's worth talking about it in the same breath because we give people the option based on their bullish or bearish. So worst case scenario for MISTI is if MicroStrategy tomorrow is down 25%, MISTI will be down 23%, right? Yes, you lost a little less, but nobody's feeling good about losing 23%, right? That doesn't feel good. So I think it's important that people recognize that you're taking single stock risk when you're using a single stock ETF like MSTY, right? You're taking idiosyncratic risk.
So here Jay has provided a really, really balanced and well-formulated explanation of exactly what MISTI is and what it is not. And he's also provided the solution in the same breath. So he's done a fantastic job of selling the YieldMax products here. And so we're going to explore this in a bit of detail. So what he's saying is that you are fundamentally long MicroStrategy and long Bitcoin risk. And that is because this here graph on the left represents the payout option or payout structure of the MISTI product. And that is if the price goes down, and like you said, 25%, MISTI will go down 23%, and it sucks. But also that higher option premium is coming and reflecting also the higher likelihood of this occurring. And so you need to be careful about how you buy this. Now, the MISTI product is fundamentally something that relies on a bullish outlook on Bitcoin and MicroStrategy. And what he said in the next breath is winter is their inverse product. This is the product that provides the option premium and takes a loss if MicroStrategy price goes up. And so the key thing to understand is that if you want to generate all-weather income, you need to use both products. So how could we go about making a decision about owning MISTI and winter and balancing between the two to generate these all-weather incomes? Well, I've got two approaches. One is cycle theory and the other is SMAX bands. So if you're a subscriber to Bitcoin cycle theory, which we can see I've outlined here in this chart, this macro chart of Bitcoin price over the last 5-10 years, is that Bitcoin goes through cycles. And these cycles are bullish and bearish and bullish. And what we do is in these periods of consolidation and bullishness, you want to own MISTI. You generally will want to own MISTI. But during these periods of bearish markets, you'll want to own winter. And that's how you balance these portfolios. So if you come out, we're coming up to what is likely to be the end of the cycle over the next few months. And as we come to the end of that, rotating your MISTI into winter would be an advisable approach. Timing it would be hard, and you might want to blend or switch between the two a little bit in order to make that transition smooth. But generally, if you're a subscriber to the Bitcoin cycle theory, the 4-year cycle, then the cycle is coming up and going to end sometime in October this year. And somewhere in that area, plus or minus 3 months either side, you're probably going to want to balance into winter and ride out the bear market. Now, if you're a subscriber to the fact that the cycles are over and you don't need to worry about cycles anymore and this puppy's just going to go up and up forever, then MISTI's fine. MISTI's going to be a great product. The other way that we can think about it is using SMAX bands. So SMAX bands is my proprietary indicator. Now SMAX bands is very good at telling you when you want to own MISTI and when you want to own winter. So when SMAX is in the green, you want to own MISTI. And when SMAX is in the pink, you want to balance and rebalance into winter. And that is the general approach that I can think of. These are the two approaches that I can think of. Now, if you're interested in the SMAX band approach because you're not too sure about Bitcoin cycles, or you want to be able to be a bit more active in balancing it, then you can go to my website, mangosteen.global, and purchase that indicator yourself. And what you'll see is that when SMAX bands hits the pink, balancing into winter, you would do well and you would generate income and possibly even some price appreciation. And then when you got back into the green, you could rebalance into MISTI and ride it back up again. So now we can explore why MISTI hasn't dived like Alti, or why it has provided outstandingly better returns than Alti. And it's very, very simple. One word: timing. So what you may recall is that MISTI was launched in February 2024, which is just at the end of the last consolidation zone. So MISTI has existed as a product entirely through a bull run now, and that is why it has performed so well. And as we move out into a bear market, if a bear market occurs, MISTI might begin to struggle. But basically, the whole reason MISTI has done well is because it has been in an uptrend market for its entire existence. Now, Alti is a mix of like 30 different stocks, which will have different dynamics that have played out in different ways and have generated a distribution of capital back to its shareholders rather than true income. So another thing that Jay mentions is predicting Bitcoin's volatility is useful to understand the dividend potential. So let me introduce to you my product, Volpol. My indicator product, Volpol, which you can see here in the bottom line. Now, Volpol looks at the volatility of Bitcoin and measures it between a value of 0 and 100. So it basically linearizes this very non-linear attribute of Bitcoin to then give you an understanding of the volatility that you're seeing. And so what we can see is that on the monthly vol, which is relevant to MISTI, right, because it pays out on a monthly basis, that we're in like the 5th percentile vol. Like volatility is very, very low for the last month. So you would expect to have a low dividend payout. Having said that, because Bitcoin's volatility has been low traditionally, that potentially opens up for Bitcoin's volatility to increase. And so, when you are seeing these record low volatilities in Bitcoin, you are seeing the opportunity for Bitcoin's price to probably experience volatility because it hasn't done for a little while. And we can see that on all these 4 metrics, so current vol, weekly vol, monthly vol, and half-year vol, they are down in the sub-15 percentile. There's incredibly low volatility going on at the moment. But exciting times, right? Because there's the potential for vol. So to wrap up this episode, YieldMax has some innovative products that are certainly worth exploring. It is critical to explore these products on a total return basis and not just on the gross dividend yield that they post. Jay has provided a high-quality, well-balanced interview on the YieldMax products, clearly articulating how they work, their advantages and their disadvantages. Knowing when to transition between MISTI and winter is key to an all-weather income portfolio. Thank you, everyone. I hope you've enjoyed this episode of Finance Bro University. You can find me on X, YouTube, and my website, mangosteen.global. Like, comment, subscribe. I've got plenty of content that's going to be coming out over the next few weeks. And as usual, my normal disclaimer, this channel does not provide financial advice or any advice of any kind. You must do your own research. Any investment or trading decisions you make are your own. This is entertainment only. You are listening to a random mangosteen on the internet.